And we're live for the Sunday market breakdown. Hello, ladies and gentlemen. Just go and grab my... Oh, I've already got comments coming through. That's crazy. I take it those are from today. Hey guys, how we doing? If you're joining for the first time, my name is James. I am a Forex trader predominantly, although I do trade some indices, some metals, often some commodities also. I trade the levels-based system. So if you haven't followed any of my stuff so far, I do these live streams every single Sunday, and basically they are made up of me showing you which trades I took this week and why I took them. And then I do a quick look at the week ahead to see what's on the economic calendar and look at what kind of market conditions we can expect for the week ahead. So if you're here for the first time, welcome. If you're back because you're a regular, thank you for tuning in once again. You guys spur me on to keep going. I see we've got Yuji here, Burrito99. I'm not sure. I've seen you on the calls before, but I'm not sure who you are in the community. But hello, nonetheless. Jan, good to see you. Chanad, pleasure. Ben, how are we doing? Hopefully everybody's had a good week. Lubomir, good evening. Yeah, it's been an eventful one. I am back in my man cave after the last 4 Sunday market breakdowns, traveling around. But that's the beauty of the way I trade. I set my levels. I do the work that's required in the morning, and then the rest of the day, we just kind of let things play out. We set the alerts, and if something goes off, something becomes interesting, that's when I like to get involved. Todd with us, good to have you on the call, man. But yeah, that's it. So gonna give it a minute or two before I kick things off here. I'll just share my Notion doc, which I usually do each week, just to run through what we'll be covering in the call. So the meat of the call is going to be trades taken this week and why I took them. I'll also explain a little bit about how I trade and why I take certain positions. Most of you here, if you are coming back and a regular, you'll know exactly why I take a particular trade. I can teach anybody how I trade probably in about a minute if you have some prior trading experience. And if you don't, then it will probably take you a couple of hours to bring you up to speed on that. And then the rest is just experience and tracking. I do not believe that the strategy that you trade is your edge. I believe you, the trader, are the edge. Meaning that it's the work you do on yourself and the work you do each week showing up in the market that really develops you as a trader. I'm all about trader development. I don't care what strategy you trade. The strategy that I do, let's say, I don't even like calling it a strategy. Those of you who know already, I prefer the term approach because I approach the markets with respect and I trade opportunities I see that I just believe are in, what's the word I'm looking for here? If you understand how the markets move, it makes trading a lot easier. Understanding what's driving the price will also improve your edge too, but we'll get into that when I go through the trades this week. This week, I've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades, which if you've been following me, well, you wouldn't have been able to because I didn't really share much a year ago. But I've been trading the markets now for the last 5 years. First, probably, I don't know how long it was exactly. It felt like an eternity. But probably the first 18 months were extremely painful. And I didn't really know where to turn. I was definitely in the valley of despair at times, thinking, does this old trading thing actually work? Or do people just sell courses to make money from it? 5 years on, I can confidently say that it is possible to make money from the markets, as that's how I earn my living. I am on YouTube. Hello and thank you. If you have subscribed, amazing. If you haven't, please subscribe below. I'm at a mighty 200 subscribers now, I believe. So if you're watching this in the future and I've now got 1 million, you see where I started. But the goal is just to keep putting out valuable content each week. I get really good feedback from the stuff that I do put out. And the people that watch this stuff end up joining this little old community I started over on School. So School.com is the platform of my choice. A lot of trading communities are over on Discord and Telegram and things like that. I'm predominantly against all of these type of communities, not because of the community itself or who's behind it, but just the nature of it. I don't like communities that ping you all day long with notifications. I think it's distracting. I think it creates FOMO, and I'm just not about that at all. So with the School platform, I love it because it's a little bit, I say it's a little bit clunky, but it's slower paced. So it's more of a forum. So you've got a community, people can share their updates. I certainly share mine often. And it combines a classroom environment. So what it allows me to do is train people on exactly how I trade. Why do I do this? Well, it's definitely not for the money. This community is completely free to join. If you'd like to go and check it out, it's school.com/leveledfx. The link is in the description and always will be. So you can find that below this video. And in here, if you've never traded before, well done you. I think if you found me first, and obviously I'm blowing my own trumpet here, but if you have found me first, I have pretty good evidence to suggest that people who have never traded and find my stuff first tend to progress quicker because they're not clouded with all these other systems and ways of trading that they may have already tried, failed, and decided that it was the strategy and it wasn't them. It's almost always you that's the reason why you can't trade. Nothing to do with the strategy. So I teach a strategy, or an approach, shall I say, that is extremely simplistic because there's so many other moving parts in trading, mostly around how you are as a trader, whether you're prepared for the day, whether you understand the market conditions, and whether you've actually experienced being in the market long enough. Like, I think the reason most traders fail is because they don't stay the long run. You have to be doing this for a long enough period of time to prove to yourself that it does actually work. The problem is, in the beginning, people have the wrong expectations. They think that because somebody showed them a strategy on YouTube that they should just be able to like copy the same thing and make money instantly. And whilst that may be the case sometimes, you may be able to pull that off. More often than not, if you do have a good head start, then the market will humble you quicker than you can believe. So you have to go through the cycles of losing money, making money, losing money, making money, and just all the while calming yourself in the market and tuning yourself into how it moves. So that's why I teach a really simplistic approach. You can come here. There's a quick start course for anybody that's not traded ever before. And then I actually give away my approach completely free as well. So I call it the leveled system because I draw lines on the chart. They are my levels. I explain in here exactly how I identify them, what makes a strong level, and what it is that I'm looking for. The other thing that's cool in here is we've got the calendar. So I do try, I mean, I'd love to do more in the free community, but at the end of the day, it is my time. And that is obviously valuable. I measure the value of my time based on the number of the number of dollars in my bank account minus the amount of time it took me to make them. So whatever that is, that's what my time per hour is worth. And let's just say it's hugely undervalued, the work that I do in this community, but that's not what it's about. I do enjoy it as well. The other benefit for me actually doing this stuff is it has improved my own trading. I said at the beginning, I think I was going to say, but I went off on a tangent, that had you seen my trading a year ago, there probably would have only been around 4 or 5 trades here. And that's purely because the last 18 months, I've really honed in on market conditions and being more aggressive when it's time to be aggressive and being more defensive when it's time to be defensive. Now, I can't go into detail exactly how I do that in this live stream in particular, but I talk about it a lot in Leveled Effects. So if you want to go and check that out, it is school.com/leveledfx. I do run a paid community as well. This is where your scammer alarm bells go off. I did actually do a post on this week as well. So if you think I'm a scammer, that's awesome. go watch this video and then ask yourself if I'm a scammer afterwards. Actually, some of the comments in here are quite funny. I'll just read some of them off to you. Sorry for you guys that have already read all this stuff, but I don't talk about this stuff enough, which means not enough people find leveled effects, which means they find some other bullshit on the internet and end up getting all the wrong ideas about trading. So if you will bear with me whilst I just ram this down the throats of people that have not heard it yet. I feel I'd be doing a disservice if I didn't. So some people in here saying, never been in a 2.1 profit challenge before. So if it's a scam, it works pretty well. That's Chanad. He's on the call right now. So thank you for that one, Chanad. Ben, very tongue-in-cheek, saying, here's everything you need to create a lifelong wealth free of charge. Cool, thanks. By the way, I also offer paid coaching if you need it. Scammer, yep. So that's kind of what I'm talking about right now. Dave P, well, I keep seeing the community winning crazy amounts of trades, so you can scam me too, please. I told Dave that he needs to form an orderly queue. Mike, definitely not a scam. I'm in the group. I see the trades won weekly. Barry, I've only been here a few days and it's the best scam I've ever come across. So as you can see, guys, like these just go on for quite a while. Morton, as ever, saying lovely words about me, which is great. Does wonders for my ego. Thank you, Morton. He says, before joining the paid group, I have to admit, I shared the same concerns James mentioned in the video. I thought it might be a scam or something similar. For that reason, it took me around 3 weeks before deciding to join, but those doubts were quickly put to shame. This group continues to exceed my expectations every day. It's hands down the best trading group on the internet right now, period. I couldn't have put it any other way, but obviously I can't say those things about myself. And if I did, you may not believe me. So anyway, I do run the paid group. The paid group is basically the same as the free. You don't need it. I'll say that right away. That's probably why a lot of people don't sign up, because I tell people that they don't need it. I don't want loads of people to join this either. The reason being is that I only did start it towards the end of August. We're now at the end of October, beginning of November 2024. And we've got a really solid group here. The benefit of joining right now is that there aren't that many people in there, meaning you get more access to me. Like if I had, 200-300 people in here, it would probably be quite difficult for me to give everybody the same level of attention that I give right now on the daily calls that I do. And that's the main benefit you get from joining the paid group. It's kind of like if you go through the free material and you still want extra help, as in you want to actually show up each day and trade. I'm not going to say with me, because it's just not how I do it, guys. If you see people on the internet, actually, I'm not going to slam this, because I do understand that some people trade within a particular period of time in the day. Maybe they do scalping or something like this, between the 9 and 11 a.m. Eastern Standard Time, New York Open type of thing. That's not how I trade. So I'm never tied down to a particular time. So if we do get trades on the call, great. That has happened before, where I've actually said that I'm entering trades. If I do see stuff early enough in the morning and I'm entering the trade before any of the calls, I do usually call it out. Like this one, I called out, I don't know which day it was, maybe Thursday. No, it was Friday morning actually, before NFP. So I was just seeing that, showing that I saw some weakness coming in across the board on the Swiss franc. Again, understanding the market driver. So when this happens, I looked across all of the Swiss pairs and could see that they were all pumping up, meaning that the Swiss franc was basically losing strength. So pound Swiss was up, euro Swiss was up, dollar Swiss was up. I think I was looking at pound Swiss, or maybe it was euro Swiss. I can't remember now. I ended up taking dollar Swiss. I'll get into that why. It's actually one of my trades here. I had 2 trades on dollar Swiss this week as well. It was Thursday morning. I'll get into why those animals are on the chart as well. So yeah, anyway, that's the paid community. You can sign up there. It's currently $125 a month. If that's too much for you, don't join. That's my advice. But if you're serious about progressing your development as a trader and you're serious about learning this skill, I'm really sorry, but the level of income you can achieve by sticking to this stuff and following along what I'm doing each day is uncapped, unlimited, ridiculous. Like, you can't even imagine how quickly it comes once you actually grasp the concept of this. The skill of trading outweighs having capital every day. So if you're somebody who is undercapitalized, you know, I have people in the community who are from all over the world. Some people are from parts of the world where the level of income is much, much lower. And so, you know, for them to acquire 6 figures in capital and be able to trade that and earn profits from passing prop firm challenges and stuff like that from the trading that I do, is just life-changing. Even if you're, you know, in Western countries where the level of income is higher and the cost of living is higher, still on $100,000 account, you can, alongside a job, it's kind of life-changing, because quite often you will double your income, and then that will lead you on to being able to acquire more capital and then go off on that route. And it really is a path to financial freedom. But do not be fooled. Trading is not something you need to do full time. I don't. I just do the same things each day. I show up consistently, make sure that I'm prepared, planned, and I know what I'm looking for in a given day. Set my alerts in TradingView, and that's it. We're off to the races. I go off and do other stuff. And that's it. I've done a video on this as well. I can't remember where it is now. I think it's in the free group. You can see it actually here on my YouTube channel. It's called What No One Tells You About Becoming a Successful Trader. In my underwear. It's me sitting on the balcony in my underwear, if you're wondering why I'm in my underwear. And it was early morning, that's why. But the point isn't about my underwear. It is actually about the things that people don't tell you, what it actually takes to be a successful trader. It's more on the mindset of things, but it is so important. So I don't want to put you off by being a mindset guru right now, but yeah, the reason most people don't succeed in becoming a successful trader is because of the way they're approaching it, which does have a lot to do with how you're thinking about it. So go ahead and give that a watch when you get a chance. I've had some really good feedback about that video. Now, I was just checking I was sharing my screen then. That would have been a major fail, and I wasn't I wasn't looking at the comments either. So all good. I'm a professional. I'm trying to be more and more professional each week, guys. You have to bear with me. I'm still trying to be a YouTuber. Not doing too well at that at the moment, but the point is to get the message out. Jan says, loving school, the best trading course ever. Thank you, Jan. You're my biggest fan. I love it. Alex, good to see you, buddy. So yeah, anyway, a little bit of blathering about the school community and what it is there, but you know, maybe you guys are interested to hear my feedback on how I think things are going, and I'm really enjoying seeing the progress that people are making there. It is really, really good. Also today, apologies for me being slightly slower than I might usually be, or mixing my words. I have had a very long day of travel with the kids, which always makes it a little bit more challenging. So I'm doing my best, but the main lesson there is that regardless of what you've got going on in your life, I do and am a huge believer in showing up and doing the work that needs to be done that will make sure that you're prepared for the week ahead to capitalize on anything the market gives you. Right? So that's that. Yeah, the animals, the animals this week, here, and here from Thursday. Thursday, I was in Portugal. We went to the zoo. So I was literally at the zoo all day and had 4 trades. So we'll be covering those off. I actually posted here in the community. That's the hippopotamus, one of my favorite animals. They're just great. I mean, have you ever seen a more ridiculous animal? It's fantastic. So this was me at the zoo, just giving an update on the Euro Aussie trade that I'd entered at that time, I think. Let me just double check. I think it was Euro Aussie. Yes. So Euro Aussie had literally just hit the level, and that was in alignment with, what is it, this guy here? I'm staring right at it probably. Euro Aussie. Have I even got it on here? Yes, here it is. It should be on there. Euro Aussie. So that was the Thursday one with the monkeys. So yeah, let's go through the stuff. So I don't want to go massively over time today because I do have a habit of doing that when I get excited about sharing a particular message. I do want to cover off a little bit about how I trade, just for anybody that is watching me for the first time ever and they're like, how does this guy do it? Like, what? He's had 100% hit rate this week. What a load of bollocks. Obviously, he's like hiding something here. Well, if you join the community, you'll understand that the way I trade has a very, very high probability of winning trades. And I do have losses occasionally. You can go back over all the Sunday market breakdowns over the last however many I've done. We must be getting close to 20 now. We must be. Maybe 18, 19, 20. Yeah, it must be something like that. But you will see them in there. And when they are in there, either they're unfortunate things that happen. I definitely would have lost money when the Israel missile attack occurred. I know people in the community took a little bit of a slap on that one. I probably would have taken a loss there too. Sometimes stuff like that happens, right? You can't really factor it in. But on that particular day, I was actually on a flight, so that kind of saved me. But yeah, these things happen. So don't be alarmed by my extremely high hit rate here. It is real. I don't care if you believe me or not, to be honest. If you're skeptical, join the community, see what I'm doing there, and you'll figure it out for yourself. Like, it's not easy to do this. This is the type of results you can expect when you've been doing this for a number of years. In the beginning, you're not going to be very good. You'll grasp the concept, you'll get it, and I can see people get it from almost day one, but there'll be something that's missing, or just the fact that you haven't had like enough, I don't want to say time on the charts, because people talk about back testing and things like this. This is not what I'm talking about. I genuinely mean, like, how many weeks, months, years have you been following a process where in the morning you look at the market, you analyze what you're looking for today, you write in your trade tracker, which is what I get people to do in the free community, write in your trade tracker exactly the trades that you would be interested in taking today if price got there, and then tracking what happened. If you do that for a long enough period of time, you will get better and you will have results like this. I'm definitely not perfect. I'm not the best trader in the world, but I do strive to be better each year. And the only way I can do that is if I'm tracking what I'm actually doing. And part of that process is reviewing what I did on the week on the Saturday. So Saturday mornings are usually reserved for me going back over my trades, looking across the market when things are a little bit calmer, there's not so much chaos. I'm not at the zoo, for example, and just seeing if there's anything I could have done better. But the way that I trade doesn't mean I have to be on the charts all day. And so it is perfect if you are currently in a job and you're looking for a way to transition into trading. I'm going to say quote unquote full time. Because it doesn't require a lot of time. It requires consistency, doing the same things each day and every week. So it's more like brushing your teeth. Like, you come to it in the morning, you go through a set of routines where you actually look at the fundamental calendar, so you can have some kind of idea of what to expect condition-wise for the day. So if you've got lots of news coming up, the day is going to be quite volatile. So you want to be trading defensively. That was my camera falling down. That was a good one. All right, guys. We're keeping it raw. We're keeping it real. Okay. That's a first in Sunday market breakdown history. So all good. We recovered. I can't remember what I was saying there. Oh, yeah, about market conditions. So let me just fix that. All right, I think we're good. So, yeah, if you look at the fundamental calendar for the day ahead, if there's no news at all, you're going to expect slightly more subdued conditions, meaning you can be more aggressive with your trading. So those two things are things to consider. And then obviously tracking your trades each day is going to be the thing that allows you to trade later on that day. So I say to people, if you haven't planned the trade, i.e. it's not in your trade tracker, then you don't have permission to take the trade later on in the day if you do actually see something. And I do that to stop people from jumping into things because they thought they saw something last minute. Like, you haven't analyzed where the rest of the market is positioned, therefore you're more likely to get slapped. So anyway, that's that. I got quite a few trades to get through. Hopefully that makes sense. If you have any questions along the way, guys, drop them in the comments. Let me know you're still there. My camera just fell over, so that was good. Who knows, maybe my microphone stopped working. So let me know it's all good. If everything's all good, send me a like, hit the like button. I think that's what YouTubers say. So do that. Anyway, market breakdown. I'm not even going to show you how I trade because it'll just come up as I'm actually showing you the examples. Let's do it that way. if that's good with everyone, I hope. So I'm going to start with this oil trade that I had on Monday morning. So let's jump over to that. But he said he's a Forex trader. Yep, you can trade levels, pretty much anything. I even had some Bitcoin trades a little while back. When was it? Yeah, back here on the 21st of October. Took a short there on Bitcoin. Why? Let's have a look. I'm on the 1 hour chart. It's a bit low for me. I do trade mostly the higher time frames, so I'll just say that. Mostly looking at the 4 hour time frame, and I'll explain why with my other trades in just a sec. But you got this level here, and I use candle body closes as the level, not the wick, right? The level is the candle body close. That's it. Don't ask me why, it just is. So that's how we do things. So when we had Bitcoin coming up, as soon as we tapped into that level, look, it's the 4 hour candle body close, we pinned it perfectly, and then we had a move away. And then what have we got over here? We've got another 4 hour candle body close, and what happened? We pinned it, not perfectly, but a little bit of drawdown. I mean, Christ, you got to experience a little bit. And then we went back the other way. So you'll just see me taking trades like this time and time and time again. And the thing with trading is, like, sometimes you're not going to get setups like this, and you just have to be patient. And the best thing is to be patient. If the market isn't moving or giving you what you need to see, then you don't need to jump in. So just have that in mind. Like, patience is your friend here. So oil, getting sidetracked again already. This was interesting. So this was Friday close before the week started, and then we gapped all the way down to here. So we actually gapped into a level. So we had a 4 hour candle body close there. But what I like to use is average true range. This is an indicator that you can put on your chart. It's called ATR on chart. It takes the average price, a currency, commodity, indice moves, on average in a given day over the last 20 days. That's what it's measuring. And the only reason I have it on here, because I hate indicators. I do not want to see them on your chart. RSIs and MACDs and EMAs and SMAs and all this other stuff. Like, just get it off. Doesn't matter. I'll argue till the death about that, because all I trade is a strong move into a level and for price to be overextended. And how do I know that price is overextended? Well, I have average true range on the chart, which gives me an idea that price has moved a significant amount in that day, and therefore price is likely to pull back. How do I know that? Because price never just moves in a straight line. It always moves up a bit, back a bit, up a bit, back a bit. The only difference is sometimes it moves up a bit more, then it moves back, up a bit more, then it moves back. And this is where you're getting your strong move in to the level. Right. So to me, what happened here on the Monday when we opened, so average true range was actually down here. But because of this gap, it was a bit weird. I haven't seen anything like this for a while on oil. We gapped all the way down to here, which was a level. I wasn't going to be taking the trade here first thing on a Monday. This was at like, I think 6 a.m. I saw this. And I said, well, if price gets down here, which is a really nice 4 hour candle body close that you can see over there, if price got down there and had a strong move in, now you can see, you have to consider the gap a strong move as well, right? So whatever reason that we gapped, that is always because of a strong move away from price up here. So we've opened lower, and we've also then had another strong move into this 4 hour candle body close. So I took a long position here, and I ran it up to the first area of potential struggle. That's how I define my profits. My profit target at first. This is why I have such a high hit rate. I'm not looking for the huge move on the trade, right? The amount of money you make from trading does not come from having a Goliath trade, right? All that does is it invites price to come all the way back to your entry and then go into drawdown and then lose and hit your stop loss. So this is a way I get rid of greed. What I do is, on many occasions, I'll cash a partial trade here. So a portion of my trade. This is me. I'm financially illiterate, but I still manage to trade the financial markets. So you have a chance. That's what I'm saying. So price move into the level, and then I'm looking to get out as soon as I think price is going to struggle next. And so for me, it had to be this wick here because that's where price bounced from before. So if I'm getting involved here, I'm taking price up to here, knowing that it's probably going to have some kind of struggle as soon as we get to here. And if you look, we actually did. We came up and then we pulled back a little bit. Then we went a little bit higher. Then we came all the way back to the entry. And I know there were guys in the community that then took this second entry. They basically took the same trade again, but a day later, and also went to the first area of potential struggle. This time you could have actually held it a little bit longer because price had held, but still, like, the same thing applies. And what I was curious about this trade, and I know I'm talking about this oil trade a little bit too much here, but what was interesting is we had this big gap here to fill. And so I wanted to know if we were actually going to fill it. So I went ahead and cashed 90% of my trade at this point here, because this was fairly experimental for me. So I cashed 90% of the trade and I left 10% of it running. Okay, so the 10% of it running actually came all the way up and hit my second area of potential struggle that was up here on the Friday morning, I think it was. Yeah, it was Friday morning. So we were talking about that on the daily call. But yeah, it was a really nice trade. But the oil trade itself, like, it was other than the gap, everything here is completely standard. Like, let's zoom out, right? Where is price likely to pull back from if it has a strong move? Look at this guy here. Like, that is the level. If we got there on that day, price was going to pull back, and that's why we took that trade. Dollar yen short. This one was also very cheeky. This was also a gap trade. Don't get me wrong, it's still the same thing. So on this, what did we have? Believe this was a 1 hour level refinement over here. So if I go to the 1 hour, pretty sure it was anyway. Yeah, so just here, this was my entry. The reason for it was that we were overextended on price. Look where average true range is here without a pullback on the Friday. So we came back down here. We had a strong move in. And because other yen pairs were also at the same level, I decided to get involved here. And instead of having my area of potential struggle where I would have had it usually, which would have been this wick, which would have grabbed me about 30 pips on dollar yen, and just a quick in and out, like not looking for this to be a hero trade or anything, right? But I was also fairly certain that the gap would close. Why am I sure of that? Well, I don't want you to just take my word for it, but I do have data to suggest that most of the yen pairs, when they do gap, they fill the gaps. So they come back to fill them before they go and do something else. So with that knowledge, that's literally me going back over every yen pair that's gapped and seeing if it did come back in an Excel spreadsheet and just checking off whether it did or not. That's the type of work that you can do. It's data driven, and therefore you're not guessing. And if you're wrong, it's just probabilities. Like, you know, if you flip a coin, it's a probability that you'll get heads over tails. And that's all we're doing here. Like, trading for a long time, I would argue, was not gambling. Today, I just admit, yes, it is gambling, but you have an edge. So you can do it as a profession, just like there are people who make their money from playing poker. You know, a lot of people will say that's a ridiculous concept, but it is a thing, and people make millions of dollars every year playing poker. So the same thing applies with trading. It's about having an edge and trusting your edge, but you can't have an edge unless you follow your plan. So please don't come up with a plan and then change your strategy every 2 weeks. This is why you will fail, because your edge is literally sticking to your plan, right? And using the data that you have. Otherwise, you have no edge and you are just at the roulette table. That's it. So yeah, this one was just the gap fill. So I set my first area of potential struggle. Where I actually just closed all of the position because I'm actually waiting on a trade up here. So my bias is for dollar yen to go long, or not to go long, but to go up. And then I'm looking for shorts on that at the moment. And the reason for that is just the positioning. Like, are we nearer the levels at the top, or are we nearer the levels at the bottom? Like, there's no other thing that I'm including here in my analysis. So that is literally it. So I managed to grab quite a chunky trade off that. It was 100 pips on dollar yen, which was a biggie for me. So it was a really nice start to the week. So that was the dollar yen trade. Pound CAD was on Tuesday. It's the only trade I had on Tuesday. Let's have a look. Was this guy here. So again, ladies and gentlemen, we had a strong move into a level. Why is this a level? Look, it's a level. You see? Level. That's literally it. That is the analysis. So a strong move into the level. I would like price to be overextended on ATR, but because market conditions that day were fairly subdued, I don't need price to go all the way ahead. So maybe a couple of years back, I would have waited for price to be overextended or invalidated this level because we weren't at average true range yet. Today, I don't do that because I bring into the context of the market's condition. So if conditions are subdued, price doesn't have enough to push it higher. In this case, it actually went all the way up to ATR. But I was kind of already including this wick over here as my potential drawdown for this trade. So it was very comfortable, and there was a backup level just above. So really, really comfortable for me. So how I would have played this is, and this happened to me on dollar Swiss on Friday as well, which I'll cover. So if this level would breach, I just go again harder at the next level. And people go, that's crazy, that's gambling. Well, it's not, because every time price breaches a level in a given day, so if price just keeps going without a pullback, it has to pull back at some point. Profits will be taken. Now, don't take this the wrong way. Price can just go on forever and ever, particularly on very volatile things like gold. Even some stock markets can do this, which is why I tend not to favor them. But that being said, they will still pull back at some point. So if we're talking about probabilities, there's a high probability that price will pull back from here. Why? Because we've got a decent level, a very obvious level that's sticking out here, like a thumb, sore thumb. And so price should pull back from here. But if it doesn't, I'm protected by the level above. And to get up there, I think I'd have to suffer around 40 pips of drawdown, which is nothing really. And I would hold that position all the way into the red there, and then I'd take it again at that level. But look, then price would have actually, I would have had even more drawdown, another 16 pips, but price would be massively overextended at this point. Therefore, if we're talking in probabilities, price has a high probability of pulling back. And so you have to have the balls to get involved at that second level, because it wasn't that you were wrong the first time, it was just that you were a little bit early. So you have to have that in mind. In this case, I didn't need that. That actually came later. I think it was the next day, was it? Yeah, it was the morning after that we came back and tested that level. I wasn't quick enough to grab that, and I'd already had it here. So this was a nice trade. I took it down to the wick here, which was the first area of potential struggle for me. It wasn't a massive trade on pound CAD, but it wasn't supposed to be. Market conditions were subdued, and I didn't expect much from it. So I got involved just because strong move into a level, nothing really else going on, and looked good. We also had a confluence of EuroCAD at the same time, where EuroCAD sort of hit this level. So EuroCAD came up here and then pulled back from yonder. I think that was on the Wednesday. So that happened the next day, but it looked like it was going to coincide. So that actually happened alongside the pound CAD trade. But yeah, that was literally it. So nothing special there, and nothing that I'm doing that you couldn't do also. It's a strong move into a very obvious level, and then we get a pullback. What was next? EuroCAD. So EuroCAD I took the next day. It was the same kind of idea. Price had pushed into the level. So what had happened the day before when we had the pound CAD thing, we had price move up here, and we didn't really have much of a pullback before hitting this level. So whenever price hasn't pulled back much, that level is just too obvious for me not to take. So when we did come up here, we did see the reaction on that. So it was just a quickie. And again, just identifying market conditions, knowing what you're trading, knowing that you're not holding on for a 100 pip move here, and getting involved. And in terms of like risk, because I know people will always ask me about risk management, where's your stop loss, James? I don't really care about stop losses. And this is where I may lose some people, and I get that. Like, it doesn't make a lot of sense when I just come at it with that from that perspective. I'm happy with the negative risk reward because my hit rate is so high, right? It's just how I trade. I'm not looking for, a sort of, let's put the silly thing on the chart that people use, this, right? So if that's where your stop loss is, most people will be looking for like a 1 to 3 or something, right? So that's their risk, and they give like a what would you call it, like a mechanical risk. So they say that's $1,000. So if I'm wrong, I lose $1,000. If I'm right, I make $3,000. And so I can be wrong twice, and I just have to be right once, and I make money. That's the concept. But you're forgetting that you're a human, and you will not like taking losses, especially if you take 2 or 3 in a row, because it will massively affect your psychology going into this. The way I trade is like getting a doggy biscuit every time I take a trade. It's like, good job, well done you. Good job, well done you. Good job, well done you. It's like a pat on the back every time I get involved in the market. So it builds your confidence, and it makes you a more confident, a better executor in the markets trading the way that I do. If you do trade any other way, like I get fine. Like I'm not saying stop, right? I'm just explaining why I think the way that I trade helps so many people in leveled effects, because it does have a much higher probability of working out, especially when you kind of get better at executing it and better at understanding how the market's moving, because your confidence is always, building. Somebody's always cheering for you. It's the market telling you, yep, you were right again. Yep, you were right again. Yep, you were right again. And the reason you were right again is because you're shooting like, I'm trying to think of another metaphor here. If you're standing, football metaphor, if you're standing in front of the goal, like some people might be trying to take the shot from the halfway line. Like that's how I look at people who are looking for a high risk reward trade. I'm literally just standing by the goalpost, waiting for someone to pass me the ball, and I just kick it in. So I'm not going to win any awards for the best goal, but I score a lot, right? So that's kind of the point. Oh God, the metaphors. I think I am getting better. You let me know in the comments if my metaphors are getting any better. They're off the top of my head, so bear with me. And we'll just check on the comments. How are we doing? Took pound CAD, Ben. Awesome. Ben, you had some really good trades this week. Always had some really good stuff that I'm seeing in the community from you. So good job. I may as well have a quick look at that pound yen trade that I know you took for the sake of backup levels. So this was from me chatting with Ben on the daily analysis call. I forget which day it was now, but Ben took took a long position from here on pound yen. It had all the right makeup for the right move. So as you can see here, we had a strong move in to a level. Why is this a level? Well, there's a clear level here, 4-hour candle body close, where price moved off in a nice way. This was the same gap that I took on dollar yen, reflected on pound yen, and you can see it worked on that too. Ben took this trade. Absolutely no problem with taking that trade where it was. Unfortunately, price breached the level, unfortunately or fortunately, and Ben had to hold on to about 130 pips of drawdown here, which he did, and then let price come back up where he took his profits around about here. So if you want to be like Ben, join leveled effects. But that's not my point here. The point was that if this level does get breached, which is a great level to take, look, average true range is right here. So price is overextended. There's a nice strong move in. Like, what's the actual move in here? The move in was almost 200 pips, which is reasonable, right? You can expect to grab at least 40 pips off of that, which I think is what you would have grabbed. Yeah, 47, something like that. But when price breached it and came down here, you've got another level. Now, if you zoom out on the daily chart, this is not a significant level, but the reason it becomes more significant is because of the move in. It's a clear level where price should pull back from, or could pull back from, shall I say, because price has breached here. So you've got to take the context of the move in. So you've got to be risky enough to go, I'm going to take the trade from here. I like what I'm seeing. And you might be seeing other things, like if you see that this is a yen move, you might see other yen pairs hitting a level at the same time. And you've decided to take pound yen here. Like, that's fine. You can do that. So get involved. Or you might be slightly more risk averse. Like maybe it's, maybe you're unsure about it and you say, well, look, if price got all the way down here today, I'm 100% taking that trade. But more often than not, you might miss that trade. So you got to accept that with that approach, you're going to miss more trades than take them. And that is not a bad thing at all, right? Exactly the same thing happened on the Friday. I was chatting with another member about taking this level here on pound yen. And he said, what do you think of that level? Does it look good? We come up to average true range. And I said, look, based on where the rest of the market's heading right now, and the fact that it's a Friday afternoon, I would rather wait until price actually breached it, came up here, and then I would look to get involved. Because it's a Friday, I'm not looking to get involved in any trades at that point. But if I did see that, I'd have to take that level. So it's almost like not wanting to be in the market. If you think about what most people want to do when they start trading, they want lots of trades. They want to be involved. They want to be doing stuff. If you focus on doing the opposite of that, which is like, I want less trades. So I really want to see price get up here. Otherwise, I'm not interested. Well, price didn't get up there. Price actually reacted from the level that we were looking at and made its pullback, right? So was my advice wrong? No, my advice was exactly how I would have played this. And that is how I played it. I did not take that trade. I did, however, take a trade on pound dollar, which was kind of in alignment, but I was seeing this as a yen move, not a pound move, right? So yeah, that was that. But I'll get to that in a sec. Easy from Eugene. Yeah. So did you take that, Eugene? Let me know in the comments. Where do we get to? EuroCAD. All right, I'm off track a little bit here. So pound Aussie, another great lesson for when a level becomes strong. So if we zoomed out to the daily chart here, you see the level I took was here. On the daily, like that doesn't really look that strong. I have my daily levels marked up on pound Aussie, and it's not anywhere near that, right? But this is what I'm talking about when I say about market conditions and looking for the market driver and a strong move. Now, on pound Aussie, this was actually data driven. I can't remember what data we had. In fact, I can probably just check real quick. Just don't want to take loads of time on this. It was Wednesday. If anybody knows in the comments and can get there quicker than me, then please do so. Or can remember. It was CPI, so I got there. It was inflation data on the Aussie dollar. Had pumped. Price had been pumping up all week. And then we saw a really nice move off the back of it. The move started at around 5 a.m. I don't know if I've changed my time zone on this yet. Time zone, London. I'm going to stick it back on. Change it later. But yeah, 5 a.m. London time. And so it wasn't one that I could catch, but I caught the one in the opposite direction. So we had a really nice move off this, which was almost 200 pip move. I think it was 200 pips, the actual wick to wick move. Yeah, but it was 200 pips down into the level. And you'd just be rude not to be taking the pullback there. So this level here is very insignificant when you look on the 4 hour, but it is there. And it happens to coincide with average true range. Now, I'm not just picking a level because average true range is there. That's not the case. The big factor here for me is that we had a nice strong move in to the level. So out of a 200 pip move with almost no pullback at all along the way, we had a really nice reaction from that. And it was expected, which is why I took the trade. So that was the pound Aussie trade. I didn't take that trade at the end, just observed it. Yeah, fair enough. Same thing for me. So that was about the pound yen. It was Jan that I was talking to about that. So all good. Euro yen long. This was a Thursday morning one. I wasn't at the zoo at this time, but I have got an elephant there just for fun because it was the zoo day. Euro yen in the morning was a nice one as well. This was during the daily analysis call. I think I was a couple minutes late to the call because I was just firing this one into the terminal. But again, same thing that we saw on pound Aussie. Look, strong move in. Here's average true range, and here's the level. Right? So this was on my chart, I think, from the day before or something like that. And so when price actually got down here, which was about, let's see when it actually hit. Yeah, it hit 6 a.m. Now, I'm an early, well, especially when I'm on London time, which I was because I was in Portugal. I'm always up extremely early for the charts. I like to be as prepared as I possibly can so that when things do happen, I don't second guess myself. I just execute. And that's exactly what I did. So I actually took the profits on that during the call while we were on the daily analysis call. Just had to pause the guys and say, apologies, let me just take my profits here because that's how I pay for things. So give me a sec. But hopefully you can see that like that's all I'm looking for. over and over and over again. There's nothing different each week. It's a strong move into the level, price overextended, wait for the pullback. No confirmation. Your confirmation, I had that question this week. Do you wait for confirmation? No, you wait for confirmation. That's like pointing the gun at something and waiting for them to move. Like, don't do that. The confirmation is the strong move in. Price is going to pull back, and that's all you need to be thinking about. And if it doesn't and it breaches, well, then you've got a much better opportunity if there is a backup level there. In this case, not really, because the next level down is in all this gap stuff, and I wouldn't really know where to be getting involved there. Let me just take some water. I'm aware of time, and I'm trying to talk about everything that I possibly can that happened in the week, because it was a really good one. I'm even going to post one of the daily analysis calls, I think, as a sneak peek into what you get when you join the paid group, because there was just so much gold, even if I do say so myself. The gold didn't come from me, though. It came from the questions. So I give that over to the members asking really good questions. I'm just the sucker that answers them. But yeah, some really good content came out of it. So that was the Euro Yen trade on the Thursday, and dollar Swiss was up next. This was a great one. So strong move into the level, as you can see. This is the level that I was looking at. We weren't overextended on price here, but we didn't need to be. There was also other moves as well. I can't remember if this was a dollar move or if it was related to the Swiss move. It may have been more dollar driven. I'm in replay mode. I'm not, but yeah. But the idea is exactly the same thing. Like the reason I took this was a strong move into the level. I had a look around the market. I was confident in the level because of what I saw. What did I see? I identified the market driver. Now, should we have a look at that now? I'm not sure if we got time. We'll do it anyway. We'll do it anyway because I don't want to talk shite in front of you guys. I want to make sure that you understand what I'm talking about, because this stuff matters if you wanted to get it right. So what I do is I rewind price back to here to try and work out. This is what I do on the Saturday as well. So like I'll go through price, look at Euro Swiss. Euro Swiss hadn't hit a level just yet. Pound Swiss had hit a level at the same time and was overextended. This was probably a better trade, to be fair. Did we get the pullback there? We did. So Pound Swiss and Dollar Swiss. These are the type of confluences that I look for, you see? So this was a Swiss weakness move coming through. This wasn't dollar driven or pound driven, although it will be slightly. When I say like find the driver of price, it's always a percentage, right? So what percentage of it is Swiss weakness and what percentage of this is dollar strength? Well, you're never going to know. But what you'll get better at over time is just feeling, I don't want to use feeling, just sort of identifying that this is more of a Swiss weakness move because a lot of the Swiss pairs are doing the same thing, meaning that they are weakening against whatever they're paired with. So yeah, we got that move. I've actually taken my first area of potential struggle off this now because I had another trade. So I took this all the way up here, held the runner, and then took a short in the opposite direction on Friday, but I'll get to that in a sec. But that was a dollar Swiss trade. Nothing crazy there either. Also at the zoo, and I was at the zoo at that time. UK 100, that was also at the zoo. So here's what happened. We've been falling. Let me go back to the 4-hour chart. Yeah, we've been falling quite a lot on the UK 100 price. This was near enough to average true range for me to take the trade. I really like the level here. We had a strong move off it previously. So when price actually came into that and tapped it, I thought I'm giving that a go. If that fails, I've got the backup level right here. Okay, so we didn't need the backup level, but that's how I was looking to play that. So again, with full confidence, knowing that if this level breached, I would be very excited about taking this level. It makes it more significant, and you can even go harder with your entry on that, which I often will do. But again, it's discretionary. It is really up to you and how you want to trade, but that's the approach. If the level gets breached, don't worry. It's a good thing because now you get an even better trade on the one afterwards. And in terms of stop loss, I will just let that run against me, and I will run the harder trade, the second entry, back up to the first entry. And then I'll close the first entry and take my profits on the second entry that I took. That's it. So usually I end up making more money. Let's say, I don't like talking about actual money because it's just not relevant when everybody's at different positions and have different capital amounts of capital. So we keep it to the trading, and not even percentages, like whatever, it depends on your own risk profile. That I'm not going to tell it. If people ask me, like, James, what risk should I take? It's up to you. Like you have to know this. When you're a trader, somebody else can't tell you what risk to take on a trade. It has to fit your psychology at the time. Like you have to be like, if you'd be comfortable taking 0.5% risk, which is all metaphorical anyway, like 0.5% of what? Your total account size or the total amount of money, your total amount of net worth, like what is it that you're comparing it to, right? For example, I would never put all of my trading capital with one broker in an account. That would be ridiculous. Like I wouldn't put that in a bank. So it has to be invested elsewhere. I have it as capital so I can theoretically trade it. But I just need enough capital in my account for the margin. That's it. But I can still trade it. So when you look at the percentages that I will make on my personal account, you'd be like blown away. You'd be like, well, that's ridiculous. But it's not relative, or it's not relevant, because I don't trade that way. I think about the amount of lot size I put on a particular position, about how much I am willing to risk based on what is a lot of money to me and what is not a lot of money to me. Hopefully that makes sense. It's so personal to you. So whether you go twice as hard on the second round here, like, it's totally up to you. Maybe you just want to take the same position. I don't know. But I'm just talking about how I play the probabilities, and then you can decide for yourself what type of risk you take. I'm not here to tell you what it should be. But hopefully you can see why that UK 100 trade worked so well. Nice strong move in, and then we got the pull away. UK 100, Euro Aussie. So this was the short on Euro Aussie. This one was beautiful. Maybe even the trade of the week, although I really like the pound dollar one at the end as well. So the Euro Aussie trade was like, if we zoom out here, I remember thinking in the morning before I headed off that if price got up here today, like, would be a no-brainer. I think I was also looking at pound Aussie, which did actually work as well. But when did that work? Wednesday. Oh, of course, that was the sell that I was asleep on, but I took the buy. But yeah, if price got up here, then I'd be really looking at taking that. But Euro Aussie was the better setup because we hadn't actually tapped into those highs yet, whereas Pound Aussie we had, because of the CPI data that we had on the Wednesday morning / Tuesday night, depending on your time zone. Let me come out of replay mode as well because that's confusing. Yeah, so really nice level to take here. Same kind of thinking in terms of backup level, but it wasn't even worth taking a backup level on this because it would have been 20 pips. Like, it's not enough for me to be taking a backup level. It's still fine. Like, I'm still well within the trade there. But yeah, that was it. Strong move into the level, price pulled back. Lovely job. Like, that was that's all I was looking for. I hope you guys don't get tired of me just saying it was a strong move into the level, price was overextended, therefore I entered the trade. Like, it's that for every single trade that I've taken here. There's nothing else that you're going to see on my charts. Dollar Swiss short. I explained this one a little bit earlier because I took the Dollar Swiss buy on the Thursday at the zoo. Actually, this one is kind of cool because I did take a backup level on this. So this is the one that I called in the community in the morning. When was it? That one there, seeing the weakness across the board on Swiss pairs. So that was this move here that I saw. This move here in the morning. Yeah, pound dollar on Friday, Ben, was absolutely cracking. I think maybe the trade of the week. I think it was the trade of the week for me just because it was slightly unexpected, but really, really clean. But the best trades are always the unexpected ones. They're unexpected because you don't think price has it in it to get there today. But if it does, you have to take the level. That's the rule. So with Dollar Swiss, we had this really nice move up. I was also waiting on, I think it was Pound Swiss. Yeah, it was pound Swiss. But before we got there, so remember, this is Friday morning. We did get there in the afternoon and some, but we didn't quite get there. We got to here. That's the level I was waiting on. We didn't get to it, and then we pulled back with dollar Swiss. So if I go back to dollar Swiss, so what happened with this one? I dropped to the lower time frame so you can see what I'm talking about. This was what I was looking at here. So I have to go, oh, like price is really getting a move on towards this level. Here's average true range. And if that breaches, I will take the backup level above here. The backup level wasn't a lot. I think it was around 12 pips, which like you just heard me say that on Euro Aussie, I wouldn't take the backup level if it was 20 pips. That's because it's Euro Aussie. It's more volatile than dollar Swiss. That's the only reason. I can't teach you that per se. Just the fact that some pairs move more than others. Like you can see the gap here on dollar Swiss, average true range is about 100 pips, whereas on Euro Aussie it's going to be a lot more. So anyway, going back to it, the reason for getting into that was had that strong move. I took a short here. Price did actually respond. You can see it came down here, just missed my first area of potential struggle by about 1.8 pips. It's always happens to me as well. You see, guys, it happens to me. Like I hear that a lot when people's first area of potential struggle just misses. Yep. So sometimes it happens. But then I took the backup level where you can see price actually got away, and I drove this one down to the first area of potential struggle. That was my initial one, holding both positions. So as you can see, price came and hit it and then rocketed down. And then came all the way back up later in the day and it went even higher. But that was the dollar Swiss move. Again, just patience, confidence in what you're doing, confidence in that this price is due a pullback here because it's overextended, and you just let the thing play out. That's all you need to do. Dollar Swiss. Pound dollar, this is the one that Ben's talking about. So pound dollar, got to do these trades of the week. Yeah, we do, but I don't want to encourage people like holding longer positions, right? You guys show me any trade that's a strong move into a level with price overextended, I'm going to say that's a good trade and leave it at that. I don't know. There's something about this pound dollar trade that was just a beautiful way to end the week. We were on the Friday New York session daily analysis call in the paid group, and I literally just took this short just before entering the call, I think. Would that be right? Yeah. So the call starts at 2 p.m. London time. So 1:30, 1:45, I just got into this and was just seeing how it was playing out. We did have a slight pullback just before. I'm on the 15-minute chart now, for those of you wondering, just to see what happened, on the lower time frame. Just before, we had NFP, obviously. It was the first Friday of the month. And I thought that would be enough for us to get to the level. It wasn't, so I kind of lost interest in it. But looking back, we just had this kind of volatility spike, and NFP didn't really give much for the week. So later it wasn't even later in the day. It was the start of the New York session. When that opened up, we tagged the price, and then we saw a bit of dollar strength coming through, which pushed the pound back, and we got that nice sell-off into the evening, which was a perfect way to end a great week. And I think pound dollar ended up doing, well, it went down all the way down to this level as well. So it ended up doing around 60 pips from the level. But that was it. That were all my trades from the week. Just beautiful. And hopefully you guys can also see that it doesn't require you to be on the screen all day. I certainly wasn't, as I can sort of show you that I was at the zoo at that day. So, and also like my travel plans for the last few weeks have been pretty hectic. I've been in Dubai, UK, so UAE, UK, back to Portugal, back to the UK, back to Portugal, now in Lithuania. So it's been a wild one, but it doesn't mean you can't trade. In the beginning, I'd probably not advise you to do it, but I tell you this as kind of like a goal to have in the future, not to, I'm going to be like James and just set the order and hop on a plane. Like, probably don't do that. But it's more just from a kind of like what you could do potentially in the future, to give you some kind of idea as to why you might want to pursue this. It is a beautiful way to make a living, and it's definitely worth putting the time in. So that's the breakdown of every trade that I've done this week. Jan says, amazing week, must feel great, well done. Yeah, I mean, it does, but no more than it does any other week, if that makes sense. Like, I think over time with trading, you kind of just get not bored, but it's definitely interesting to see what the market does and if it responds in a different way to anything that you're used to. Like when I don't understand what's happening in the market, that's an opportunity for me to learn. I like that. When things just happen exactly as I expect them to, because I'm seeing and reading the market correctly based on how I trade. And again, if you want to know how that is, it's school.com/leveledfx. Then it's just expected. So I try and minimize any highs and I try and minimize any lows, which is what I would suggest you do as well, just because that way you're just going to be a lot more objective with your trading rather than getting sucked into, after a winning streak, maybe entering bigger positions the next trades, or taking trades that are a little bit too risky or high risk, like lower probability. Because you've been on that winning streak, you've got to just be really aware of the addictiveness of a win. And so that's all I'd say to that. The amazing part for me is that I get to share all this stuff with you guys. Like, I genuinely look forward to doing these things now. Whereas before it would just be like, I go off to my man cave and spend sort of half an hour looking at the economic calendar, moving my levels around and just being prepared for Monday, and that would be it. Nobody else would know about it. No one would see it. Nobody would tell me nice things, how brilliant I am. And so yeah, it's a good one. Ben says, any plans for an in-person meetup in the future, James? Yes, we will all jump in our Lamborghinis and go to Germany, the Nürburg. But no, in all seriousness, I would love to do something like that in future. I'm a big believer in creating my future customer. I think that's the best way to build. I can't remember which book it was I read this in now, but the best way to build any kind of community or loyal following is to create the customer. I think it was actually Sam. I don't know why his name goes blank now. Sam Ovens, the one of the owners of the school platform that the Leveled Effects community is on. He used to have a consulting business where he would create a course and his clients would ask him, does he have anything else? And I think that's really where you want to be at, where the stuff that you put out is so good that people just want whatever's next. And I think whatever is next is really for you guys to level up and to start making a really decent amount of income from what we're doing here, and then helping out everybody else that comes along. That's why it's a community and not just, a $5,000 course or something. So yeah, I mean, in-person meetups, why not? Like, the biggest objection that we've got to get over as a community is this whole, is it a scam thing? And it's not really something that's easy to do quickly. You have to just keep showing up consistently, going, this is who I am, this is what we're doing, these are the people who are involved. And at the moment, online's the fastest way for me to do that. In person, I think would be great, but it would probably involve me promoting it quite heavily, organizing stuff as well. And but yeah, in future, when the community grows to a certain size, I think why not? Even I know we've got quite a few people in the UK, but whenever I am in a particular place, as the community grows, I will actually just say that, I'm going to be here for the next week. Let's do a quick meetup, coffee shop thing, or I don't know, something like that. But yeah, I'd love to do something like that. Jan says, looking forward to seeing you in Dubai soon. Yeah, why not? It's a good place to go and grab some inspiration from. Great energy. A lot of people talking a lot of negativity about Dubai. I've lived there on and off since 2019. So I'm not one of the new guys that has recently moved out there. It's my 6th year being resident, and it's a place I think you can spend a lot of time for inspiration, but it's just very different, especially if you're from my part of the world. Things do seem a bit alien there, but you adjust and you kind of just take inspiration, which is how I've chose to look at it. Economic calendar. Let's do that before I forget. So let's have a look. So what I'm going to do now is just have a quick look at the week ahead. It's something I do on the Friday in the paid community, just because I like to get people thinking about what's coming, so you can kind of get an idea of like how the week's going to be, especially like planning. Like Monday, tomorrow, like just chill, set your levels, see what happens. We've got a lot of election stuff coming up, but like you can't really use it as such, so it's just like whatever. Let things play out. The charts always kind of show what's going to happen anyway, I believe. I only look at data as kind of like a turbocharger. It just speeds things up. So why is that good? If things are if they're sped up, then you're more likely to see a stronger move into a level. So you can really use that to your advantage. So Monday's going to be fairly chilled, which means if you do set your levels and there is a strong move into it, for whatever reason, it could just be a pure currency play, take the damn level. Like there's no reason for you to be defensive about taking that level. This is the difference between aggressive and defensive trading, understanding if markets are subdued or volatile. So that's how you're going to play Monday. Tuesday, we've got some inflation data on, on the China. What am I talking about here? I told you I'm going to struggle a bit today. I think I've done pretty good though. I'm quite happy with my performance, even if I do say so myself. The Chinese yen, which I don't really pay too much attention to. We've got the Royal Bank of Australia interest rate decision. Actually, yes. So I know that we've got quite a few interest rate decisions this week, which is going to be fun. So Monday, I'll say with a caveat, it's going to be chill, take the levels, but if you are taking Australian dollar currency pairs, be aware that we have the interest rate decision from the Royal Bank of Australia during the night, if you're in my time zone. Let's just say Sydney session. So be aware of that. Don't be getting into any trades and having them go slightly against you in a slow market where things aren't moving, and then you have the interest rate decision. Like, just be careful with that. And then we've got all the chatty bits afterwards, the press conference and yada, yada, yada. Then we've got another speech from the European Central Bank. So just be aware of that. Probably nothing, but be aware of it. We've got ISM PMI. So the PMI data on the dollar is going to be a fairly volatile move. So expect volatility on the dollar, which therefore will create volatility probably across the market, as the market tends to follow the dollar's weakness or strength. So yeah, be aware of that. We've got employment change that night with the New Zealand dollar. So same thing that I said Monday, just be aware of getting into like pound New Zealand dollar, euro New Zealand Swiss, CAD, whatever. Just because of that. Doesn't mean be afraid of getting in, just be aware and be really sure that you want to be involved in that pair before the move. The way I want to play that is I want to see the data come out, and I want to see a nice big reaction, and then for price to move in a strong way into a level that I've identified as a good area of pullback where it be overextended in the given day. The context of the day is the most important thing there, right? So don't trade before, wait till after. That's always the best way I think you can trade. Whenever you wait, a better trade comes. It's always the way. If you find yourself ever itching to get into a trade, just go, I don't need it, because there'll probably be like 4 amazing trades tomorrow, and I would have just taken a confidence hit on this less than average trade that I've just entered. And the most important thing is your confidence, not your P&L, is your confidence. If you do stupid things, your brain cannot differentiate whether it was because you followed your plan or not. It will tell you that trading doesn't work and you're bad at trading. So just be very, very aware of that your brain is working against you if you take a knock to your confidence. So protect it at all times. If you're being a little bit too risk averse, as in you're seeing great setups and you are calling it but not executing, like, you don't lose anything for doing that. That can also build your confidence, right? So it's always better to not take the trade if you're at all unsure. But there will come a time where you're like, you've been right about everything for so many trades in a row that you really need to be taking the trade. But there's no harm in not taking it. I'd much rather see that than you do actually take it. Then we got another speech from the European Central Bank. Thursday, we've got trade balance on Aussie dollar overnight. So same thing again, just be aware of getting into any Aussie dollar trades late in the day on the Wednesday. This is Thursday, right? Yeah. Retail sales on the euro on Thursday. And then we've got the interest rate decision on the pound. So that's going to be a biggie. Look at the pound positioning at the moment. So we just sold off, right? We've been continuing to sell off. So we're kind of expanding on the pound at the moment. My preference is for us to get down here off the back of the interest rate decision. Consensus, I missed what that was going to be. Consensus is a cut, so it is going to be negative for the pound. If they decide to cut rates below 4.75%, down to 4.5, let's say, then that would be very negative for the pound. Probably good for the economy, but negative for the currency, because that's how currencies work. The whole currency market is driven off the back of interest rate decisions. That is everything. Wherever there is higher interest, money will flow there, making the currency pair higher in demand and therefore worth more. So it will be stronger in price. That is how the whole thing works. And every other data release leads up to that. That's my summary of how fundamentals work. I don't believe anybody is ever really that good at fundamentals, to be honest. It's just, for me, it just turbocharges the charts. There's too much of an opinion about everything with fundamentals. NFP is the example I always give. Every major bank around the world gives their prediction for NFP. They're always wrong. And so, like, nobody ever gets it right. And these are supposed to be professionals. So that just tells me everything. And then we've got the interest rate decision on the dollar, which obviously is going to be highly impactful. So Thursday is going to be a hugely volatile day, meaning do not be taking the intraday levels, especially on pound and dollar pairs. Dollar pairs, maybe in the morning, you'll be fine. But make sure you really, really do like them, because in the afternoon, that's when I think you're going to get the better setup. So again, this is how it always works out. Just wait longer and you will get a better setup. Then Friday, we're going to have a more calm day with just some CAD unemployment in the afternoon, which can sometimes actually move the CAD quite nicely. It has done for me on several occasions over the last few months. So employment data, so it's the net change in employment, and then the unemployment rate, and then Michigan Consumer Sentiment Index, which always seems to be paired with Canadian unemployment, or has been lately. So I'm not expecting anything from that. Nothing really does happen, or it does, and it's always just, I'm blinded by what I'm seeing on the CAD pairs. But yeah, that's kind of the upcoming week. So Monday's going to be pretty chill. Tuesday, there's a few things to consider there, mostly on Aussie and New Zealand pairs. And then as we get later into the week, we're going to have a lot of volatility on the interest rate decision pairs, which I think was Australian dollar, pound, and the US dollar with the Fed interest rate decision. So good. I was sharing my screen that time. I would have to check afterwards. Bit of Q&A. I realize I've gone over in time, but you know what? I just don't care today, because I already feel absolutely destroyed. So we're just going to do it. I'm already dragging myself through, but I'm enjoying it. It's all good. Sana says, these Sunday sessions are so powerful. Every time I think I screwed up, I'm getting so much confidence from these. Just need to be more self-trust to keep my trades and not to panic and take them off too soon. Sana, that is exactly trading. That is exactly what this is all about. And sometimes it just takes somebody who is doing it and has been doing it for a while, quote unquote, successfully, to say, you're not doing anything wrong. Like, that is just how it is. Losses are normal. In the beginning, you're not going to be very good. Accept it. The game in trading is to stay at it long enough. So my biggest, it's not even a big challenge really, but my first challenge to help you guys overcome is to not be put off by not being good from the get-go. Like, you shouldn't be good at everything from the get-go. That was my mistake when I entered trading. I'm one of these people, and maybe you can identify with this. Most things that I have a crack at in my life, I'm usually quite good at. You know, I don't know if that's because I'm a fairly confident person or what, but like, I'll usually have a pretty good idea of how to do the thing reasonably well from the beginning. And with trading, it just was not the case. So I was massively humbled by the market, and I know that you can't come at this thinking that you're going to be even remotely good from the beginning. So, and also, like, it may be the other way around. Maybe that you are quite good at it, and then for whatever reason, something happens and you go through a bit of a losing streak, or maybe you got a bit overconfident, and there were some new market conditions that you didn't understand, and then you start taking losses, and then you think, maybe all the beginning stuff, it was just luck, and then all this negative talk will start in your head, and you'll start spiraling out of control. And then that's when you go back to YouTube and go, how to make money with trading. And then you find somebody new and you find their strategy, and then you go down that route, and the cycle repeats and you never get anywhere. So knowing that ahead of time, I think, is really important, because you can save yourself an awful lot of time and money messing about. So yeah, really good observation. I'm glad you're enjoying the videos. This is exactly why I do them. This feedback keeps me going. And obviously seeing all these people posting charts that look the same as me, or same as my charts in the community, without me, providing a signal service or something, which I will never do. If you ever see a signal service from me, somebody using my face, I will never, ever, ever do a signal service. So if you do see that, that is a blatant scam. Like all the people I have joining each day in leveled effects, they join as one name, change their name to mine, and then start messaging you guys. But fortunately, the majority of you are smart enough to catch that, and you do message me and tell me about it, and then they get kicked out. But yeah. Anyway, guys, I think I've covered everything off that I wanted to cover off today. Those were all my trades. 2, 4, 6, 8, 10, 11. Yep. So that was it. More of that this week. That's all I'm looking for. More of that this week, and to see more of you guys coming along with me for the ride. If you have been busy doing other things and you haven't been able to focus on your trading that much this week, don't worry about it. Jump back on the horse. Keep going. The main thing is to keep showing up consistently, week in, week out. And if you miss a couple of days here and there, don't beat yourself up about it. It's not the diet where you accidentally have a cake and then you say, screw it, I'm now going to have a pizza. You just hop back on. The market will be there on Monday the following week or so. But anyway, to stop myself waffling, I'm going to wrap things up there. We've now been 1 hour 23. Guys, thank you so much for joining. It's always a pleasure, and I hope you enjoy the rest of your Sunday. Take it easy.